Hi there, Frank here from Remic Trading Systems, and in this short video I will comment this recording to help you visualize and understand better our methodology and how the events on the markets that we're watching out for are shown exactly the same way in both in the Market Scanner Pro and also on the chart. These are the same things happening. This is the chart, of course, is visual, and the Market Scanner Pro is mostly numerical. So let's see. I have four instruments here highlighted, as you can see, ES, NQ, CL, and the 6E, and the relevant, the corresponding charts. And I put it on a very small time frame so we can see some action as we speak. So if I may, I will comment on these events, and I will keep an eye on Market Scanner Pro, the upper area of the chart, and I will only look at instruments which are in the yellow square here. So only on the ES, NQ, CL, and 6E. I'm not going to worry about the others. So let's see. If any of these columns light up, then we will look at the chart and I will explain what we're looking at. So now, as you can see, we have a setup on the CL, a short setup, which means, in other words, a bear flag. And this is exactly the bear flag on the CL. This in the Market Scanner Pro and this bear flag on the chart is the same thing. As you can see, our software correctly, and this is a bear flag actually, our software correctly identified the bear flag on the chart. Of course, if you look at the chart, you can see a bear flag. But the point is that in Market Scanner Pro, you can watch 10, 20, or 100 instruments if you want without having to open the chart. You just look at Market Scanner Pro and you see all the bear flags, bull flags, and triggers and everything else numerically without having to look at the chart. It makes our work very, very efficient. So let's see. Next event I'm looking at here is on 6E, price is below the lower Keltner. Less than -1 means that price is closed outside the lower Keltner. Why is that an important event for us? Because it is the first step in our methodology. The touch of the Keltner is often followed by building a bear flag from which we might later want to go short from. Right now, it was just a Keltner score less than -1, and that's where price was. Since this action is very quick, price already came back, but it's still 0.99, so you can see that the last candle is very close to the lower Keltner channel. All right, let's look at some other actions here. What else is happening? Nothing on the ES right now, nothing on NQ. We have a short setup on the CL. It's still the same thing. It's the same bear flag that we looked at 2 minutes ago. So I'm just waiting for some events to comment on. And I hope this will help all of us here to visualize and see how this all comes together numerically and visually in the chart. All right, so I'm just waiting for an event. Something should happen soon since we're on a 1-minute chart. And 4 of them, so something should happen pretty soon. And while we're waiting, let me just again review the steps of our methodology. The first step is that price touches the Keltner. That will be shown in the Keltner score column. Bigger than +1 is outside the upper Keltner. Less than -1 is outside the lower Keltner. That's step number 1. Then price typically builds a bull flag or bear flag, depending, and that will be in the setup column. So if the setup says short, long, you know there's a bull flag or bear flag on that instrument. It's not a trade yet, but it's a heads up for a potential trade. And finally, we have the signal, which is the trigger, And the trigger will be shown by a algorithmic signal on the chart, by an arrow, blue or red, or any color you specify for that matter. And that will arrive when, if and when, price decides to leave the channel and start to move down. So we always insist on price movement. Price needs to start moving for us to enter the trade. We want to enter the trade with momentum. So these are the three stages of our methodology, and these three columns show us exactly what to watch out for. We also have a hot zone indicator here, which we can cover in another video. That's this indicator down here. It's very simple. Basically, if it's long, then it crossed above the zero line, and if it's short, then it's crossed below the zero line. It helps us make some decisions and to see what may be coming next in the market, but it's actually not the focus of our attention right now. Our focus is these three steps. That's the cornerstone of our methodology. All right, so let's see. On the ES, here we go. Price stepped outside the Keltner, is outside the Keltner. Also on the NQ, outside the Keltner. So you see, you don't have to look at the chart. And of course, all the other instruments that you want to see, if I ask you, where is the ZN? You know the ZN is below the lower Keltner. Simply because you can just look at the Market Scanner Pro and see exactly where a given instrument is without having to look at the chart. Also, it's objective because it's numeric, so there's no room for subjective decision-making and perhaps cognitive biases. All right, so here we go. We have a short setup on CL still. This is still a bear flag. Now, what we're looking for is a trigger to the short side. It may or may not come, doesn't matter right now, but if it does come, then you can guess that the signal will light up and it will say short here. And as price leaves and transitions from setup to signal, the short setup will disappear and the signal will appear. There may be sometimes some overlap, but usually that's how the transition happens. Okay, here we go. A new candle. Let's see what's happening. Nothing on the ES, nothing on the NQ. So no real change here on the four instruments that we're following. So I'm just standing by for the next event. Let me just mention in brackets that now we have a long crossover on the hot zones, which is the triple R indicator, and that simply means this, that there's persistent momentum pushing to the upside here, and although it's a bear flag, and we have a trigger, the price is leaving the bear flag, there's a little contradiction because momentum is still pushing up, but there's a delay here, of course. So this momentum is an indication of this pullback here. And look at this beautiful event here. That's the algorithmic signal. It arrived on the close of the bar, and now since it happened and the bar closed, it's not here anymore. On a 5-minute or 60-minute chart, it would be here for 60 minutes, of course. It's just here for one bar. But please note that on the chart, past signals do not disappear. In the market analyzer, they must disappear because time goes by and we have to. The market analyzer is always up to the second, up to the tick. But of course, the chart displays the historical events going back any number of days or any number of bars that you specify. All right, let's see what else is happening. Nothing right now on the four instruments that we're monitoring. So actually on CL, we saw the whole process. First, we touched the Keltner, then we built a pullback area, and then we had the algorithmic signal, the trigger. Keltner, setup, signal was the order of events. And that's what we do day in and day out. Now, of course, personally, my trading, there's always a discretionary factor. If you want to go fully algorithmic, it's perfectly possible, especially with the new version of our software, which is coming out in a few days. There's fantastic new functionality that will help you in your work if you want to be fully algorithmic, which is one of the successful ways to trade, obviously. But it's not for everybody. If you want a discretionary point, one or two or several in your decision tree, that's perfectly all right. But this software can tremendously help you in the process because it takes a lot of burden off your shoulders. It does many things automatically, so you can focus on what matters. All right, so here we go. On the NQ, we have a short setup, which is this bear flag here. And you can actually see this little red or magenta candle. The magenta candle is the same thing as this short setup. So on the chart, you can set it up in such a way that the candles, the relevant candles corresponding to events in the Market Scanner Pro, can be colored. I color them just so that you see. So all the white candles, nothing happening, but the colored candles, they correspond with an event in Market Scanner Pro. Okay, let's wait for maybe one or two more events and then we can close this video. So here we go. On the ES, we have a short setup, which I know that it's a bear flag. A short setup is a bear flag, and it's right here. And the candle is colored, showing that this is why this colored candle is inside a bear flag, and that's what triggered this setting here in Market Scanner Pro. Now, of course, you can look at the chart if you want to. There's no obligation to use Market Scanner Pro. It's mostly of great use to traders who want to follow several instruments, or there's many ways to use this or to put this to good use. For example, I might trade the ES, but I also want to keep an eye on corresponding and correlated instruments like NQ, RTY, or YM. And I can put the indexes next to each other, and when one moves, I trade the other. So there's many, many different ways. You can do the same thing with ZB and ZN, or sometimes with GC and SI. There's certain, not to mention, of course, currencies, where oftentimes major pairs are setting up trades against the US dollar. So there's many, many ways to use this profitably, and we can talk about finer details in a later video. This is just the main brushes. That's just the main idea here. How we look at the markets, how we classify events, and how we take advantage of opportunities on any number of instruments. All right, so I'll stop right here, and let's save this video, upload it, and I hope this will be helpful to all of you. Thank you very much, and take care.